This could be massive for Tractor Supply Company. TSCO just posted record Q2 sales despite brutal weather. And here's why this rural retail powerhouse trading at $58.59 might be the most undervalued opportunity in retail right now. We are looking at a company with $820 million in free cash flow. That is absolutely crushing it in ways most people do not realize. First, their consumables engine is a cash printing machine. 55% of revenue comes from feed, pet food, and propane, stuff rural customers buy every single week no matter what the economy does. Their Neighbors Club has 41 million members driving 80% of sales. That is not just loyalty, that is addiction-level customer retention. The growth runway is absolutely massive. Management is targeting 3,000 Tractor Supply stores plus 500 PetSense locations. Long-term in a $225 billion market. Rural population migration and the hobby farming boom are creating massive tailwinds. 77% of rural dealers expect higher revenues in 2025, up from just 53% last year. Their e-commerce strategy is genius level. 80% of online orders get fulfilled directly from local stores, slashing last-mile cost while they scale heavy item delivery to 25% of stores by year-end. They are literally stealing big-ticket market share from Home Depot and Lowe's in rural markets, where those giants cannot effectively compete. The margin expansion story is just getting started. New Arizona distribution center and robotics upgrades are boosting throughput 25%, while cutting costs 15%. This translates to 10 to 30 basis points of annual gross margin expansion through 2026. That is pure profit flowing straight to shareholders. Management is returning cash like there is no tomorrow. They are targeting 75 to 100% of free cash flow back through dividends and buybacks. They have already bought back $159 million in the first half of 2024. CEO Hal Lawton has delivered a 580 basis point return on invested capital improvement since 2020. That is operational excellence. But let us be real for a moment. There is one major red flag here. Comparable store sales have turned negative in fiscal 2024 and 2025. And management has cut earnings guidance twice this year after missing both Q1 and Q4 expectations. When a company keeps missing their own targets and revising down, that is a credibility problem that suggests either poor visibility or systematic overpromising to investors. So what do you think? Are you bullish or bearish on TSCO? Is that rural consumables mode enough to overcome the execution concerns? Let us know in the comments and subscribe for more hidden S&P 500 gems like TSCO.